stock specific. Let's get to those stories. I've got Zydus Lifesciences on my list first up, and it's a thumbs up. They've got a US FDA final approval for a dasatinib tablet. This particular formulation treats cancer, and the tablets will be manufactured in the Ahmedabad facility. So this particular kind of medicine, this dasatinib, has had US sales of about 1,800 USD, 1,807 million USD. That's for the 12-month period ending Jan 2025. So big space, and they have the US FDA approval for it, even though there is that cloud of tariffs on pharma. But at the end of the day, with pharmaceuticals, the fact is if tariffs go up, it passes on to the US consumer. That's not something that Trump might want to do. If he's in the mood for concessions, definitely pharma sector will be one of them, because life-saving, very crucial kind of a sector. So that's one to watch out for. Zydus Lifesciences, maybe you want to keep that on your radar. Gensol Engineering is definitely a thumbs down. And okay, this is a stock which has had a world of pain. They came out with a clarification yesterday which might not really help. So let me give you that context. The stock has been down 34% in the last 5 days due to credit rating downgrades, essentially by CARE and ICRA. The rating downgrades have happened due to short-term liquidity mismatch. So the company put out a statement yesterday after market hours saying that they understand the concerns that downgrades have raised. They're committed to addressing these concerns to all stakeholders. They've also denied any involvement in falsification claims, this was a claim made by one of the credit rating agencies, and they will be setting up a committee to review the matter. But looking at their current debt picture, this is something that might not see any kind of relief soon. Their total current debt stands at 1,146 crores, debt ratio of 1.95. The company has in fact reduced their debt obligation by about 230 crores in FY25 so far. So Gensol might have more pain. They have also planned to reduce their debt by disinvesting, by moving out of some businesses as well. L&T is the other one, and this is a thumbs down as well for L&T. And this is interesting, just see how this pans out, because the new order inflows from Saudi Arabia, remember their Saudi orders were the big one. Is that a concern, is the question that we're raising. The Saudi Arabia budget constraints could impact L&T International revenues, which contribute 50% of the top line of the company in the 9 months ending FY25. L&T, in fact, gets 33% of its order inflows from the Middle East in those 9 months. Saudi Arabia's contribution to revenue was at 18% in 2024 and 8% in 2023. So it's coming higher from Saudi Arabia, which is why a thumbs down. So what are the major concerns? Aramco's dividend cut impact. Saudi Arabia's oil giant has cut its dividend by 30%. The expected dividend of $85 billion in 2025 versus $124 billion last year. That dividend feeds into the Saudi Arabia government's coffers. So lower crude global demand has also led to a fall of profit of 12%. This loss of special dividend may lead to a loss of $40 billion for the government. And of course, the Saudi Arabian government owns 97.5% stake in Aramco. So which is why keep an eye on L&T today as well. Might not have an impact immediately, but this is something important to note, and which is why it's on my radar as well.
Okay, so I'm not going to spend too much time talking about the liquidity measure by the RBI, because we're going to delve very deeply into it, and Neeraj has already spoken about the cliff notes. But I do want to talk about banks and the fact that if we can pull up the year-to-date and calendar year-to-date Nifty bank performance, you would see that the declines are to the extent of about 5%. That's marginally lower than what you've seen for the Nifty 50 itself. And at a time when a lot of people over the course of the last few months and weeks have said that you can find value in banks, they're attractively poised in terms of valuations, that hasn't yet panned out. And perhaps to a certain extent, a large part of the negativity that was being built into the banks is one, asset quality in certain pockets. Of course, you're talking about agri loans and you're talking about microfinance, but there was also the question mark about liquidity. Consistently, right? So you had just before the RBI monetary policy and the announcement of a rate cut, there was a significant measure to bolster liquidity. The latest measure is going to be the last fantastic shot in the arm. So you could see a a significant up move in some of these banks today, particularly on account of the relief that they're getting. Why is it important? Because remember, there's been a 25 basis point cut in the repo rate. Before that, of course, there was a CRR cut. But for that repo rate cut to transition and to move into the system, there needs to be liquidity. If there's no liquidity, there's no transmission of monetary policy. If there is liquidity at this stage, that gets transmitted much faster, and then the conversation becomes in April, just about a month from now, will the RBI cut once again in order to spur the economy? And then banks should be front and center on your radar. The second pack that I will talk about today has to do with asset management companies, and we've spoken in the recent past about the flows into mutual funds by retail investors. Now, we've got an HSBC note that has come through, and they're saying that they're maintaining a hold on HDFC AMC, but they're cutting their target price quite significantly to 3,900 from 4,350. On Nippon AMC, they're downgrading it to hold from a buy, and they're cutting the target price also very, very significantly to 550 from 840. What are they saying? Saying that not all SIPs are in fact sticky. There have been cancellations, and this is data that we've spoken to you about as well. The holding period for over 1/4 of the total SIP AUM is less than 1 year. A lot of new SIPs have come into the system, and this is also fact. 30% are in schemes where the propensity for redemption is high. And here we're talking about small cap schemes and to a certain extent mid cap schemes. The latest data that was released by AMFI also suggests that a large number of SIPs are in these two pockets. With the rising SIP discontinuation rates and the mark-to-market losses, the AUM growth outlook appears to be weak in the near term. Now, take all of this with a pinch of salt. So far, over the last several months, though there have been cancellations, the SIP number, gross number, has been resilient. It is at close to all-time highs. Of course, that net number has been diminishing a little bit. But what they have done, HSBC, is to cut the EPS estimates for Nippon AMC on the growth pressure, and it is quite considerable in terms of the cuts that they have in the earnings expectations for these companies.
Okay. So, I have a couple and not more. One of them is Galaxy Surfactants, because it's entered into a strategic collaboration with a global customer to provide EPC services for specialty ingredients plants overseas. And they are in discussions to enhance this collaboration post commissioning of the plant. It may be a very small thing for Galaxy, but strategic collaborations eventually end up a lot of times in companies being able to set up a manufacturing plant back into India. It's happened with multiple fragrance companies as well. So let's wait and watch if it's the same here. The management will be best placed to talk about the significance of this, but seems to be an interesting one, so keep an eye out for that. And then, we've spoken about banks, we've spoken about everything else. I'll repeat, oil could be a very interesting catalyst for oil marketing companies as well as aviation stocks. So considering that WTI has extended losses and now it's the lowest level since May 2023, or Brent since 2021, if you will, I think it's an interesting place to see what the HPBP IOCs of the world as well as maybe Interglobe and SpiceJet both could do. So keep an eye out for these stocks. Certainly ones to reckon with. Remember, the trend is in their favor because they've done very well over the last couple of days, and on a bullish day could do more as well. So keep an eye out for them. But guys, none more so than banks. And I wonder that whenever this tide turns, as we said, will the street recognize that the Reserve Bank of India did all that it could, or if not all that it could, then did a significant part to turn the sentiment and aid liquidity, because it was a need of the hour, because RBI has certainly done that.